Hey, it is Phil Ratcliffe coming to you live from our Morningstar Investment Conference. I think this is the third year in a row that we have done a live broadcast from Morningstar. It is kind of one of our better conferences that we go to that is very investment focused. So even though we're financial planning focused, investments are very important to us and to you and to your financial plans, especially most of your retirement plans. So I'm going to give you a couple highlights, just like we have in the past years, about some of the things that we took away. I will have to say there's some interesting aspects about this conference that have been different than the 5 years I've been coming that we'll highlight a little bit that are a little surprising. So one of my most enjoyable things that I like to do at this conference, and many of you know me won't be surprised, is like I like the technology things. And so I would say that's one of the disappointing things is there's not much new on the financial technology front, even though there's been tons and tons of noise about artificial intelligence and big data and how things are going to work faster and be more interconnected and cloud oriented. And really, there's just not a lot of progress there. So, maybe this is an in-between time frame where they're really working on some of those breakthroughs that are going to come out in the next 1 to 2 years. I don't know. One of the side notes of that is when you talk to a lot of the people that are big in technology, like Joel Bruckenstein and some of the others that are at like the T3 conference and in the tech gallery here and at TD Ameritrade's video. There's a lot of consolidation going on, right? So again, just like in other industries, there's these huge companies with tons of money just buy on them. So one of my fears is that maybe that's stifling innovation, whereas if we did have more smaller companies innovating and competing, we'd have more. But who knows? Maybe it just is a lull. But I do hope that we continue to bring these great breakthroughs in technology that we can partner with other third parties so that we can bring financial planning and investment to more people, that we can continue to lower prices and put forward even better products and services for you guys. So, so again, that's kind of one of the disappointing side of things. Another, on a really much bigger positive note, we've talked a lot, if you've been in for reviews, if you're a client or what's about values-based investing. So, ESG, which stands for environmentally, socially conscious, good governance. That's really taken off. I would say almost a fourth of the conference was about ESG, and that's really heartening. And this has been about the third or fourth year where you saw ESG really be niche to come up to be like one of the cornerstones of one of the biggest investment conferences. So that's super, and it's right because it is almost a fifth of investable assets now, and so that's awesome. So on that front, when we really look at it, there's lots on the environmental climate, a little bit less on the good governance and like proxy voting impact, like trying to change the companies, and really light on the gender and diversity, and that was one of the focuses of one of the things we were in. So hopefully they make some more developments there. But talk to us in meetings about using some of our values-based portfolios. Almost all of them have outperformed the traditional, and our traditional portfolios have done terrific. And the cost differential is almost negligible. And on our main ESG portfolio, I think now it's actually a little bit less, which is amazing. So ask us about it sometime. It's a great opportunity. I would say one of the main takeaways that we took away as a company was, even though there wasn't a lot of great tech things out there, really just talking to some of the people that are integrating technology and adopters like we are, or even consultants to companies that have done it, is to really make a mind map or a flow chart of just how all these technologies are working with each other. And I just know off the top of my head that even though we leverage technology very well, there are a lot of capabilities from those technologies that we're not totally harnessing. And there may be some redundancies to where we could save costs and what so. So that's one of the things when we get back that we're going to work really hard on to make that happen, to harvest some of the efficiencies that we could possibly get from that, to hopefully actually push forward a couple more of the capabilities that we're already paying for you, so that there'll be some new things coming soon, and hopefully some cost savings as well. And then a side effect of that will be the people that work for us, for you, can better understand what the different tools are that we use for you and their interconnections, so that they can actually use those tools more efficiently for you. So it'll be great training and understanding wise. So the last point that I'm going to hit on is, I think, something that nobody's really mentioned here, but it is an absolute, I would say, feeling, but it's real, is that from when I started coming here and doing these, well, here was 5 years ago, but I've been going to conferences for like 10 or 12 years. There's much less big money, which in my opinion it's a very positive development, right? People are more trying to put forth their products from a standpoint of what can they do for clients, and there's been a lot of fee compression, which means they probably don't have the huge marketing budgets that they used to, and that is a good thing. I mean, like, one of the consequences of this is that we see a lot of, when I used to come a long time ago and I'd look through investment potential partners and vendors, and like 3/4 of them we just had to out of hand say no, because it's too expensive, right? We're not paying that much because statistically they can't produce that much alpha to or excess rate of return to justify that fee, so statistically you're not going to come out ahead. But now we're seeing a lot of these great managers that I would say used to charge like somewhere between 1% to 2%, coming down to like 0.3 to 0.6, and so, you know, we get them down at that mid to lower range of that, then there's a very real possibility that they could produce more value for the strategy and the research, and the actual work that they're putting in there over just an index strategy like Vanguard. The last session we were just in, they were just talking about with the rise of indexing, how you could have a lot more, you know, crowd momentum, people not having the diversity of different views, which is probably one of the main creators of bubbles and what so. And so you could have something like a passive investing bubble. Just for example, if you have a lot of people just using the S&P 500 index from, you know, iShares or Vanguard or what so, it's raising all the companies up in there. And come on, seriously, a lot of the companies in there are a lot better than the other ones. They shouldn't all be rising equally, right? So there is some inefficiency there that a good investment manager might be able to overweight, underweight the ones that are the better investment opportunities to correct those markets, and things like that is what makes markets efficient. So again, I don't want to get too much into the weeds, but we come to these things to get these ideas, to sharpen our tools for you, and then also pass a little bit of the news back. We like to be transparent, open. We hope you enjoy watching these things. You know, we're very committed. You know, I go to about 3 to 5 conferences per year and try to get everybody that works with us to go to at least 1 or 2, so that we're always doing that for you. But even beyond that, there's so many opportunities these days to learn, whether it's web conferences or e-learning. Continuing education is very important to us. So if you've got questions or comments, please write them below. Apologize if this didn't make it out to YouTube. We'll have it uploaded momentarily, so it'll be there too, but hopefully it is going live out to Vimeo and to Facebook. We'll have the 360 up later, and hope you're having a good finish to the week. Again, as always, if there's anything that we can do for you, let us know. Hope you are having an awesome spring, and we'll see you when we get back from Chicago.